I know today is a very significant day that Trump has coined Liberation Day, but did you know that historically today is an extremely significant day for a different reason? On this day in 2007, New Century Financial, one of the largest subprime mortgage lenders in the US, filed for Chapter 11 bankruptcy. Now, this event marked the beginning of a chain reaction that ultimately led to the 2008 financial crisis and a global recession. Now, 18 years later, we find ourselves in a similar situation. We've seeing discussions about potential recession, and they're intensifying right now. Inflation remains persistent, central banks are facing significant challenges, and the market's current state feels eerily reminiscent of the past. So, while no official recession has been declared currently, history teaches us that it's always prudent to prepare for the worst whilst hoping for the best. Let's dive into the events that unfolded after April 2nd, 2007. Let's examine the stock market's trajectory during that period and explore the lessons we can apply to today, especially in the context of cryptocurrencies in 2025. So let's talk about what happened after April 2nd, 2007. On that day, like I said, New Century Financial filed for bankruptcy protection. This was one of the largest subprime mortgage lenders in the US. Now, they had been under investigation for accounting fraud and it was drowning in bad loans. That day, over 3,200 employees were laid off. Now, the market didn't crash immediately, but it was the first major domino to fall. Now, following that, over the next 12 months, the mortgage market completely unraveled. In June of that year, Bear Stearns faced financial significant losses due to its exposure to subprime mortgages and eventually collapsed in March 2008. In September 2008, Lehman Brothers declared bankruptcy, triggering a global financial panic. And from the peak in October 2007 to the bottom in March 2009, the S&P dropped over 57%, and it took 17 months for it to bottom out. So what was the impact on the economy? Unemployment rates soared, housing prices plummeted, millions faced foreclosures and lost their savings. The timeline is crucial here. The warning signs emerged in early 2007, but the full-blown crisis unfolded over the next 18 months. The market's delayed reaction underscores the importance of early preparedness. So now let's talk about Bitcoin. In 2009, in the ashes of the 2008 collapse, Bitcoin was born. Satoshi Nakamoto launched Bitcoin with a message embedded in the Genesis block. The Times, 3rd of Jan 2009, Chancellor on brink of second bailout for banks. Bitcoin was created as a response to the failures of traditional finance, to offer a decentralized, trustless alternative. But here's the thing. Bitcoin has never been tested by a true recession. Bitcoin has only ever existed in a world of QE, low interest rates, and stimulus. That may be about to change. So let's take a look at some lessons from 2007 that might help us prepare for the next 12 months or so, starting with the inverted yield curve, also known as the recession indicator. Now, historically, every time this chart goes negative, meaning short-term rates are higher than long-term, a recession follows. Now, it inverted in 2006 before the 2008 crash, and it inverted again in 2022. Next, let's talk about the US inflation rate. Back in 2007, inflation wasn't the main issue, but today inflation is still above central bank targets, and that limits their ability to stimulate the economy. And then we have rising credit card delinquencies. So delinquencies are rising, especially among younger borrowers, and that's a red flag. So let's talk about our key takeaways from 2007. Number one, early warning signs are often dismissed. In 2007, initial indicators like the collapse of subprime lenders were overlooked by many investors. So the lesson here is to stay vigilant and pay attention to those early economic indicators. Now, number two, liquidity disappears rapidly. The crisis saw sudden tightening of credit, making borrowing difficult. And the lesson here is to ensure access to liquid assets during uncertain times. Let's go to number three. The markets are slow to react. So despite early signs in 2007, the market didn't fully react until late 2008. The lesson here is patience and preparedness are vital. Markets may not immediately reflect underlying economic issues. Number 4, diversification is crucial. So traditional assets like stocks and real estate suffered significant losses. And this is why diversifying your investments to mitigate risk during downturns is really, really important. Now, number 5, most crypto people probably aren't going to agree with, but in this period of time, cash reserves provide opportunity. So those with available cash during the downturn can invest at lower prices. And the lesson here is to maintain cash reserves to capitalize on opportunities during those market lows. Remember, as Warren Buffett wisely advised, be fearful when others are greedy and greedy when others are fearful. Now, back to Bitcoin. Since its creation in 2009, Bitcoin has experienced bull and bear markets, but it hasn't faced a global recession. So the question is, how will Bitcoin and the broader crypto market perform during a significant economic downturn? One potential scenario could be that because Bitcoin is mostly correlated with traditional markets, cryptocurrencies might decline alongside stocks and other assets. Or the more hopeful scenario is that we might even see a decoupling if Bitcoin emerges as a store of value and potentially attracts investors seeking refuge from traditional market volatility. So this period could serve as Bitcoin's ultimate test, validating its role as digital gold or exposing its vulnerabilities. Now, in the last 2 cycles, when the cycle I felt was topping out, I always sold all of my altcoins, but I've never sold my Bitcoin. I considered myself to be a Bitcoin stacker, and my logic was pretty simple. One reason why I never sold my Bitcoin was because of tax. I used to live in a high tax country. It was 30 or 40% capital gains tax or something like that. And realistically, I knew that I was never going to buy the exact bottom and I was never going to sell at the exact top. So when you shave off, say, 10-15% from the bottom and 10-15% from the top, and then you have to shave off another 30 to 40% in taxes, there really isn't all that much left over. If I had sold and I paid the tax and then I attempted to time the market for re-entry, it just didn't seem like I was going to get the maximum value for my Bitcoin out of doing something like that. So living in a high tax country, it didn't make sense for me to sell my Bitcoin. However, my circumstances have evolved. Now I live in the UAE, a country with 0 personal income tax and no capital gains tax on investments. The financial dynamics have shifted favorably for me. So, I kind of have a bit of a different situation now. Now, recently, I was actually talking to a friend of mine who's been in crypto for a really long time as well, probably about the same time as me. And we were talking about our initial motivations for entering the crypto space. And I think the reason that most people get into crypto is probably the same for everyone. The bottom line is we want to enhance our quality of life, right? Like that's really what it is. Whatever our life is now, we get into crypto in the hopes that it will make our life a little bit better. Yet when you think about it, for a lot of people in crypto, despite achieving gains in prior cycles, they're always reluctant to liquidate holdings. And that means that those gains always remain unrealized in terms of actually improving your life, which again is the whole point that you get into crypto. So when I was talking to my friend about this, we kind of had this realization and it led me to reassess my strategy for this current cycle. And so I'm going to take you through what I'm personally doing, because in this cycle, I'm going to do things just a little bit differently. Now, I'm still going to sell out of all of my altcoins. So make no mistake about that. I definitely sell all of my altcoins at the end of every cycle. Why do I do that? Because I'm a trader and I can look at macro trends and I can know when to get into things and when to get out of things. And from the cycles in the past that I have been a part of, there's too many times where an altcoin that was popular in one cycle never made a comeback in the next cycle. If you look at this cycle, for example, last cycle, gaming was everything. If you wanted to make money, you just had to be in gaming coins. This cycle, no one cares about them. Are they yet to make a comeback? I don't know. But for this moment in time, as I film this video, gaming coins are nowhere to be seen. That doesn't really happen with Bitcoin. We remember Bitcoin every cycle and we rely on the Bitcoin cycle to make money. So Bitcoin's a bit different. But altcoins, they're essentially a one cycle pump and dump. And until that changes, I do not hold altcoins multi-cycle. So that part is not going to change. But what is going to change is number 2. And that this time, what I have decided is that I am going to sell a portion of my Bitcoin. Now, I've been holding this Bitcoin for 2 cycles and continuing to add to it. So for the first time ever, I have made the decision that I'm going to sell a significant portion of my Bitcoin. Now, how much exactly? I'm still figuring that out, but I've been through 3 full cycles in this space. I've put in the work. I've held through massive drawdowns. And the difference this time is that I'm finally in a position to take advantage of the opportunities that I've created for myself. You know, I had the guts to pick up from my country that was a high tax country, leave my family, leave my friends, come over to another country and try to build a better life for me and my family away from everyone. I did all of that. I took all of those steps, and now it's time for me to reap the rewards of that because it's not easy, you know? Hey, so it's Future Annie here. I'm taking a break from editing that video, and I realized I forgot to tell you something. So why am I selling? Other than to realize the dream. The second reason that I've decided to sell my Bitcoin this cycle when I don't usually sell it, and this actually is so important, I can't even believe I forgot to tell you. The reason why I'm going to is because if it turns out to be true that we do go into a recession, it is too high a risk to hold Bitcoin through a recession because it's going to be the first one that it's ever experienced, and we don't know how bad it can get. Like I said earlier in the video, it could hold up great and people could consider it a store of value and it can do amazing. That's why I'm not going to sell 100% of it. But it could also do the opposite, and it could do a lot worse than prior cycles. We could go into the worst bear market that we've ever seen. I'm not saying I think that's going to happen. I don't know if it's going to happen. My only choice here, the only way that I've made the decision is by asking myself, what is the best case? What is the worst case? And what is the most likely scenario? My old business coach taught that to me. Whenever making a business decision, if you were confused about what to do, you ask yourself those 3 things and you answer that question. What's the best case? What is the best thing that can happen if you make this decision? Number 2, what is the worst thing that could happen if you make this decision? And number 3, what's most likely? Now, if you can handle the worst case, you stick with it. If you can handle the most likely case, great, no problem, you go ahead. So when I ask myself those 3 questions, I think the most likely case is that we won't decouple. That's what I personally think. If the whole stock market corrects, I don't think the world all of a sudden is going to become so woke and be like, ooh, Bitcoin is our currency. Like, I think that's a pipe dream. And if it happens, great, I will be so pleasantly surprised, but I don't think that's going to happen. So I think it's most likely that if the stock market crashes, if we go into recession, if everything gets bad, probably crypto will go down with it. And if it's a really bad correction in the stock market or really bad bear market, crypto might see its worst bear market yet. So I made the decision by deciding that I don't want to fully be part of that. I'm happy to be a little bit part of it. You know, my first biggest purchase of Bitcoin was on the day that COVID crashed. That was the time I went all in with everything I had, and I didn't have much, but I saw it, and instantly in my mind, I just said, I'm never going to have an opportunity like this again. And I was in a trading community. Everybody was short at the time. I was short too, but I had $1,000 account at the time. And so I was risking $10 per trade. So I had this huge short with the biggest risk to reward, the biggest percentages ever. But that was such an epic crash that I was like, this doesn't really amount to much money, you know? So those thoughts do come in your head. You're like, imagine if I had so much more money on this trade. But I didn't think like that. I didn't let my mind go there. My mind went to, am I ever going to see Bitcoin at this price again? Probably not. And I bought. And the same thing happened when we crashed to 15,600. In the last bear market, I was talking about the possibility of that happening. Did I know it was going to happen? No. Did I think it was going to happen? I knew that there was a probability it could happen because there was a lot of liquidity down there. I didn't know why it was going to happen or what would cause it. You know, I didn't predict FTX or anything. I just knew there was liquidity there, and I was prepared to buy if it went there, but I was also prepared to buy at anything under 20K in case it didn't go there. So those two were the biggest purchases of Bitcoin that I've ever made, and I don't regret that. And to date, I've always had the opinion that, do I think I'll ever buy Bitcoin again back for the cheapest price that I've ever bought it? And the answer has always been no. So therefore, I didn't want to take the risk. But it might be different this time. You know, this battery is running out, so I'm going to go. So the moral of the story is I decided not to take the risk, and that's why I'm selling a percentage, but I'm happy to have a little in the game, because if it doesn't turn out that way, I'll still gain from that anyway. Moving back into the video. And like I said, I've spent years stacking Bitcoin, but this time I'm giving myself permission to do what I got into crypto for in the first place, which is to actually live a better life. And for me, that means realizing some of the gains that I've earned. Now, this doesn't mean that I'm turning my back on Bitcoin. It means I'm honoring the hard work it took to get here. It means I'm honoring the dream. Remember, I said to you, we all get into crypto because we want a life that is a little bit better than the life we have now. Now, remember when I said earlier, be fearful when others are greedy and greedy when others are fearful? Well, this next stretch might just be your moment to apply that. If the 4-year cycle theory holds true, which today it has, we're expecting the peak of this bull market to come sometime in Q3 or Q4 of 2025. That means when Bitcoin bounces back from its current correction, and personally, yes, I do believe we will recover from where we are right now, we could be entering the final and most explosive stage of the bull market. Now, that phase from the next major bounce to the eventual top is your greatest chance to be locking in profits, whether that's through smart trading, selling long-term investments, or converting gains into stable coins or fiat. That's the window. You want to be cashing out those gains, because if a recession does hit, you want to keep that money, you want to keep your crypto gains from this cycle sidelined until we're through that or towards the end of it, and it's time to start deploying again. And yes, it's going to be hard. If a recession hits, it is going to be hard, because you are going to have profits that you have put aside from this cycle, and life will be hard. You may lose your job. If you have a business, your sales may go down. Your investments may drop in value. So many things can happen where you're going to be tempted to dip into those funds just to get by, but you got to try not to. You have to find another way, whether that is cutting costs, pivot if you need to, whatever it is, but don't burn the capital that you worked so hard to build in this cycle, because I tell you, this has been my strategy every cycle. When I sell out of those altcoins, I don't go and use those profits in the real world. I sit on them and I wait for the bottom of the bear market and I put that back in. And that's how I've been able to compound over multiple cycles. But this one is going to be the best one. I actually did a tweet a while ago. People didn't like it, but I did a tweet I did an X post on X. And I said, this isn't the cycle that you don't want to F up. You've probably heard that saying about this cycle is don't F this up. This isn't the one. It's the next one that you don't want to mess up. People didn't like it because they didn't think that I was explaining why I was saying that. This video is explaining why I'm saying that. Because if you can cash out of this cycle, sit on it as hard as it's going to be, and if a recession does hit, right through that, the timing of the recession that people are saying, if it comes, should line up with the timing of the Bitcoin bear market. And so once all of that bottoms out, if you then put those profits back in, that is where we're going to have the most exponential recovery. Why? Because we'll probably have QE, right? So we're going to get a COVID-like cycle. People didn't realize back then why that cycle was so good. We're learning it now because we're in a new cycle where we don't have QE and people are struggling. So if you can stay focused and take profits when it's time, sit on the capital, even if the world turns fearful, that money reinvested at the right moment could be the very thing that transforms your life. Now do you start to see why I'm so excited for a bear market? Why I have no fear about this cycle ending? I have had this plan for years and it hasn't been the time to tell you because everybody was focused on making money. But we're now getting to the stage of the cycle that you need to focus on taking that money out of the market and sitting on it, because otherwise you won't have anything to reinvest in 2 years' time after we're through all the terrible things that we're likely to go through. So just remember this. You didn't get into crypto just to collect coins. You got in because you wanted something more for yourself. You wanted either more time, more freedom, more choices, a better future, whatever it is, there was something that you wanted that led you to crypto in the first place. Now, if your portfolio gets to the size where you can finally reach that dream, don't let fear, greed, or indecision stop you from claiming it. Taking profits is not a betrayal of crypto. It's the fulfillment of your vision. You don't need to be a bag holder to prove anything to anyone. So as we move into the most critical phase of this cycle, remember why you started. And when the market gives you the chance to realize the dream, make sure you actually do. This is a new style of content I'm going to be doing on this channel, teaching you lessons I've learned throughout my life as a trader, an entrepreneur, an investor, to hopefully help you with your own path to wealth. So if you've made it this far into the video and you did enjoy it, please let me know down below. Just leave a small comment and also hit the like button if you haven't already, because that is going to help get this video around the internet to more people. And while you're there, don't forget, if you're not already subscribed, hit that subscribe button.